Hello, everyone. Thank you for joining us. We'll be started shortly. Okay. Hi, Michelle. I think you're muted. Okay.
Can you hear me, Nicole?
Yes. Can you hear me, see me well?
Yes, I have an AC in the background. Is it making too much noise?
No, I think we're good. Okay, and we have at least 25% already on. We can start in about a minute or.
I have to say, I think you're the PowerPoint queen. You want to give me a class?
No, I definitely, I use the same PowerPoint over and over and over and over and over again. So I thank whoever actually created it to begin with, but thank you. I can give you a few tips, but not that much, not that much. But okay, I think we can begin. Thank you everyone for joining us. My name is Nicole Cunningham. I'm a partner at H&CO. We have Michelle Canero, a partner and basic CEO, I imagine, at Canero Immigration. And today we want to cover the I-944 Declaration of Self-Sufficiency. Most importantly, part 3, as this is what takes up a large portion of the application. Michelle, if you can give us an opening as to where this came about, the purpose of the actual I-944, and why it's rather important that it's completed correctly.
Okay, well, thank you for having me on the webinar. Nice to meet all of you that are listening in. So I'm the managing partner at Canero Immigration Law Firm. I think a couple of our clients are on this webinar. The I-94 form is the new form that is required by USCIS as a result of this new public charge rule. And it is required in all applications for adjustment of status. So that's a green card application. We use it in employment-based cases, family-based cases, diversity visa lotto. Anytime you're applying for a green card, this form will now be required as of February. The form is long. The instructions are even longer. And essentially, it is a data collection sheet for the agency to be able to evaluate under what they call the totality of the circumstances test, whether or not you will become a public charge in the future. It is a prospective test. It is not about you being a public charge at the moment. They're also using a variety of different factors to assess whether they think you will become a burden under their definition on the government once you become a resident. In reviewing this form, when it first came out, we identified that there was a lot of financial information and a lot of information that required not only disclosure, but analysis, assessment of whether or not taxes were properly filed, and disclosure of assets, income, at a level of completeness that we realized for our foreign national clients who maybe were first-time applicants or tax filers, they would really need to understand what the tax implication of these disclosures would be. So we've been working with H&CO on these cases to have our clients get assistance completing part 3 so that not only do they have the complete picture, that the calculations of property and asset valuations are accurately reflected so that all income is properly reflected and disclosed, things that we as immigration attorneys are not specialized in, but also to help assess what the past or future tax liability and implications of these assets, liabilities, and income will be. We're going to focus on part 3 because the other parts of the test and the totality of the circumstances factors that we as immigration attorneys look at in addition to the financial, such as health, household size, education, skill set. You know, we're also looking at language ability and age. Those are other factors that immigration is looking at. So it's not just about your financial picture, but today we're going to focus on the financial aspect of the form and talk a little bit about how an accounting firm like H&CO assists in compiling these documents and reflecting the proper information on the form. So
perfect. Okay, so let me bring up back the PowerPoint. Again, this part 3 is looking at you and your household members' assets, resources, and financial status. There's various aspects of your financial status that you may not think is part of it, like such as health insurance, that is within part 3. So we're going to go into detail onto what each part means, what they're looking for, and how to best complete this form and best present yourself so that your application helps your case. As Michelle mentioned, they look at various factors, and this can definitely help your case so long as it's completed correctly. The part 3 is going to look at everything for you and your household members. I'll go into detail of what your household actually includes, but they're looking at your assets, your resources, and financial statuses. There's a lot of documentation that supplements the financial information that's provided. And just a quick summary, even though it can be a detailed list depending on your type of income, are IRS transcripts. I'm sorry, I think my speaker is okay, Michelle? You hear me well?
I do. I put
okay,
myself on mute just so that I can interfere.
Perfect. So the IRS transcripts, bank statements, investment account statements, credit reports, evidence of health insurance, and other verifications of certain public benefits, verifying that you either have them or don't have them, or if you applied for them. Okay, so we'll go into detail on that. But first, I want to cover a very important part as to what is included in the financial information. And before I go into the financial information, I want to talk about 5 very common tax forms that will help you gather the information needed for the financial information. So let me pull up the application so you can see what we're talking about here. Part 3, which is page 3 of the application, is where they're going to want you to list your household income. I can easily go ahead and tell you what the household income part is, but before that, I want to cover certain things that apply to international persons that are becoming U.S. tax residents, or that are U.S. tax residents, or that are considering to become U.S. tax residents. A U.S. tax resident is anyone that spends 183 days in the U.S. during a tax year, or if they meet a substantial presence test. So a very common mistake is somebody saying, I don't have a green card, therefore I don't have to file a U.S. tax return as a U.S. individual. That's false, it's wrong. If you spend more than 183 days here, or if you spend 120 days per year or more in the past 3 years, you are a U.S. tax resident that has to file a individual income tax return and disclose worldwide income or assets. And that's regardless of visa. You could actually have a tourist visa, but if you overspent your days, well, from immigration standpoint, you should not have, but from an income tax standpoint, you did. That's why this is important. These are 2 worlds that very commonly collide, the immigration and the tax world, but sometimes they don't, but it still doesn't mean that you're not a U.S. tax resident. Okay, so it doesn't mean that you have a green card or a passport from the U.S. U.S. tax resident means that you spend a substantial portion of time, which is 183 days, or a certain formula that I can go into in more detail. But 5 common international tax forms, and these are foreign bank account reports. First one is foreign bank account reports. If you are a U.S. tax resident, that you have any type of visa and you're spending a certain amount of days here, you will have to disclose foreign bank accounts if they have an aggregate balance of $10,000 or more. This is going to help you from your asset reporting standpoint, which is why I'm highlighting this. So foreign bank account reporting, you have an account in Venezuela or Colombia or in Spain. If you have 3 accounts that each of them had $4,000 each, although one of them didn't have $10,000 at any point in the year, but all of them combined did meet the $10,000 aggregate balance or more, you have to disclose foreign bank accounts. Purely the information about it, the account, the bank name, the bank address, and the highest value. This is not taxable, this is purely reportable. So this is something that, as we're doing these forms, we're helping persons prepare their I-944, we see that on their tax return, they're not including these bank account balances, which, one, it's a requirement. Two, it's going to help you for your I-944 case because you want to include that asset value. And if you haven't been including your tax return, it's going to cause a problem for you. The Form 8938, I know the numbers are irrelevant, but that's how we speak about them in the tax world. 8938 is specified foreign financial assets. So insurance, pension plans, life insurance plans, any retirement account that you may have that's abroad, those specified foreign financial assets, depending on your filing status and the balance that they actually have at any point in the year or at the end of the year, you have to disclose those as well. Those are also assets that are going to have to be reported on your I-944. I just got a question now. What if my daughter added me to her bank account? I'm assuming this is regarding a foreign bank account. So you would have to report it. So if your daughter added you to her bank account and that bank account is in a foreign country, anywhere outside of the US, and that account at some point in the year had 10,000 US dollars or more, you would have to disclose that account because you are either a signer or a beneficial owner, either jointly or individually. So if you sign on an account, you own an account, or you don't have any ownership, you just work for a company and they made you a signer on that account abroad, you have a reporting requirement with your US income tax return. And this, again, is one of the assets that's going to help you for your case, so long as if you're the actual owner, not if you're a signer. Okay, so I hope that answers your question. If your daughter added you to her bank account, yes, you would have to include that account if you are a signer or an owner, so long as the balance is $10,000 or more. Specified foreign financial assets, any foreign financial asset that you have, depending on the balance, based on your filing status, you will have to disclose that. This doesn't mean that that is taxable. So the foreign bank account, you don't pay tax on the balance of the bank account. If the bank account generates interest income, then yes, but on the actual balance, no. Same when it comes to foreign financial assets. These are purely informational returns. They don't necessarily mean they're tax returns. So if you have a foreign insurance, a foreign pension plan, a foreign retirement account, even if you haven't touched it, you say, I don't receive income from there, I don't even know the balance. Well, you need to find out the balance, because what happens now is that foreign countries are required to inform the US of any US person that owns a financial asset with their bank. And these are FATCA rules. If you sign a W-9 abroad, they are reporting you to the US, and you should also report that same information so that there's a match. If you're signing a W-8 Ben and you are a US green card holder or a US citizen or a US tax resident, you technically should not be signing a W-8 Ben. You should be signing a W-9, because the banks have to know if you're US or non-US, because they have reporting obligations abroad to the US. And that's why you have to make sure that you match exactly what they're reporting. So that's how it applies to foreign bank accounts and specified foreign financial assets, which specified meaning a certain array of things. And all these forms are available on, let me show you, for example, you can Google Form 8938, and every single form that I'm speaking about, they're all available online, and they can tell you the detail of what actually is a specified individual, what exactly would be a foreign financial asset, and the thresholds. It's a lot of information, but you can do a quick search and see if it's insurance. Let's see, insurance, and it'll show you if you have foreign social security account, or if you have and that's considered a financial account, then they'll tell you when that's reportable or not. A 3520 is a gift return, a gift informational return. If you receive a foreign gift, let's say your father is abroad and you became a US, you're here with a certain visa for work, and they send you annually, they send you over $100,000 in any tax year, you have to disclose that in an information return that goes with your tax return. The receipt of the actual foreign gift is not taxable, but it definitely is reportable. Okay, so even if it's not taxable, many things are still reportable. So if it's more than $100,000 in aggregate, so if he sends you $10,000 every month, in 1 year you received more than $100,000, you would have to disclose that in your tax return. That's going to come up on the I-944 Part 3 in additional income. So that's why I'm mentioning this. These are things that help you from the I-944, but if your tax return doesn't match, you're going to have an issue when it applies to you. I see a question, what about if it's different persons? If different persons send you various gifts, but you didn't receive more than $100,000 from one person, then you technically don't have to report that. But if one person sent you more than $100,000, then you would have to disclose that actual foreign gift. But if it's from different persons, then depending on the amounts that are actually gifted to you. That's going to come up on the I-944 when it comes to additional income. Let's say you receive $60,000 every year in foreign gifts. That may not be reportable on your tax return or on the Form 3520, but that's going to be an item of additional income. So this is mostly, I want to bring to the attention of everyone what has to be informed and what has to be reported, but some items may not have to be reported, but they will be part of the I-944. So if it's from various persons, depending on the amount received from any one person. And that's 3520, receipt of a gift from a foreign individual. US gifts don't have to file this return. The gifter in the US is the one that files an actual return. But if you receive a foreign gift, you have to inform of that. Form 5471, this is extremely common. This is something that most people will have in some capacity in their return. And this is where we encounter a lot of issues because they were not necessarily including that or didn't include it correctly. And I'm going to show you what the actual form looks like. This is an informational return of U.S. persons, meaning a U.S. tax resident, not necessarily a U.S. green card holder or citizen, but anyone that's a U.S. tax resident. So an information return of U.S. tax resident with respect to certain foreign corporations. If you own a company in Venezuela, in Colombia, in Argentina, in Spain, depending on the percentage of ownership, you will have to disclose a certain level of information. If it's less than 10%, you may just have to inform that in the 8938. But the first year that you become a U.S. tax resident, you have to disclose basically everything in some capacity or another, so long as they have a certain value. I like to answer the questions as I go because I know that they're important to what I'm speaking about. So let me answer this one. If I live and work in the U.S., but I'm not a U.S. person, should I complete a W-9? So if you live and work in the U.S., but you're not a U.S. person, meaning you have a non-immigrant visa, should you complete a W-9? Yes. Why? Because the W-9 is for U.S. tax residents. And let's actually look at the W-9 together so that we can understand what this means. Okay, let me look at the instructions and substantial presence test. Okay. So now this is not showing me exactly what I wanted to show, but the W-9 is for any individual who is okay, here it is. Any individual who is a U.S. citizen or resident alien and a partnership, corporation, or associate, or an estate and domestic trust. The actual details of the W-9 go on to inform that you are a U.S. resident alien from a tax perspective if you meet more than 183 days or more than 120 days per year. Therefore, for purposes of the W-9, you would be considered an actual U.S. resident alien. Again, these things conflict sometimes with an actual immigration, your status, because you may have a non-immigrant visa, but you could be a U.S. resident from a income tax perspective, which is why you would include a W-9. Banks.
Right. So I'll just step in here. I'm always very careful with clients to say, just because you're not a resident for immigration purposes doesn't mean you're not a resident for tax purposes. And it's very confusing on an application like this one, where you're disclosing tax status and immigration and the terms get conflated. But it's very important. Just because you're on a tourist visa doesn't mean you're not a tax resident. And if you're here on a non-immigrant visa and you meet the substantial presence test and you're not one of the exceptions, you are a tax resident. So you have to think about this in two separate ways. And this is why in completing these immigration forms where there is financial disclosures, we really are advising clients to look at these factors with a professional like H&CO to ensure that they're also assessing what their tax liability is. Because even though we're applying for residency and you haven't yet become a resident, that doesn't mean you aren't already a tax resident or weren't in the past. And if you were a tax resident in the past and failed to properly file taxes, now is the time to make those corrections and clear up those disclosures, because they will come back to hurt you in your immigration application. So I'm just taking the point here to stress, because some people might be tuning out saying, oh, well, you know, I'm not a resident yet. I haven't had to file taxes. That is specifically why we are sending you to H&CO or asking you to consult with a tax professional in completing these forms, because you may actually be a tax resident. And we are seeing immigration asking in these forms specifically, did you file a US tax return? Why not? So if you fail to properly disclose taxes when you should have, that will be held against you in an application. I'll just give a quick example. Last week, I was at an interview for a doctor. He's been living and working here on a temporary work visa for several years. He's filed his taxes based on his income here. But the officers were looking through his tax return and identified that it appears that he had rented a property at some point, and that income, rental income, was not reflected on his tax return. Now, they are not IRS auditors, but, and I, you know, obviously I challenged that they should not be doing that. They're not, that's not their field, but they're clearly going that route. So it's very important that as we're, you know, dealing with this form, which just came out in February, and because of COVID, there have been few to, if probably no cases that have yet been adjudicated on these forms. We have to understand that they're going to be looking at this for inconsistencies, incompleteness, and misrepresentations, because that's the angle that immigration takes. So you want to have full disclosure with your CPA. You want to make sure that you're fully disclosing everything and that you're taking it, you know, in good faith when they tell you, hey, you should have disclosed this. Understand that your failure to disclose it could have immigration implications as well.
Correct. So this is a good page from the IRS, determining alien tax status. And basically they mention if you are an alien, not a US citizen, you are considered non-resident alien unless you meet one of two tests. So you are a resident alien of the United States, and that's again, the W-9 says if you're a resident alien or a citizen, you complete that. But if you're a resident alien of the United States for tax, you are a resident alien for US tax purposes if you meet either the green card test or the substantial presence test for the calendar year. So if you live here, and that's back to the question that you had asked, Carlos, if you live here or you spend more than 183 days in 1 year, or if you meet a certain number of days each year, which is 100% of the current year, 1/3 of the prior year, 1/6 of the year before that, then you are considered a US resident from a income tax perspective and from the W-9 perspective. So if you Google substantial presence test, you'll see this is what explains how many days you can spend here without meeting the test to be a US resident alien. But if you do spend all year here, but you don't have a green card or a passport, you could still be a US resident alien from tax purposes, which would require that you complete a W-9. Again, these definitions are all very particular, and again, they do coincide often with immigration, but not, it may not always match up. So that's why it's very important to know your residency status from a US perspective, which is kind of irrelevant to your immigration status in many occasions. So you should have completed a W-9, and that's why those banks that get a W-9 do inform the US, and that's why this information should match up. So Form 5471 is to disclose ownership interest in a foreign corporation. Depending on your percentage of ownership, you have a different category or amount of information that's to be included. But again, from the assets part in the I-944, we want to include the value of your interest in a foreign corporation if it helps your case. But if you haven't included that in your tax return, we have to correct that so that everything can correlate and match up. There is significant capacity to fix any error. The IRS understands that many people do not know these rules, that these rules are very convoluted, that these rules are not easy to understand, and many accountants, not CPAs, because for the most part CPAs should know this, but if you work with a tax preparer, which is very common practice, and many tax preparers are great and wonderful, they just don't study this information, so they may not have even asked you the right questions. That's why there's a lot of amnesty programs available. You can correct this. You have to do it in the right way as to not cause penalties or interest. So there's significant capacity to go through one of the programs available. There's a delinquent informational return submission procedure, which helps you clean up everything, provide a reasonable cause being, I just moved here, I was not aware, I had all the right intentions, I hired someone, they didn't tell me, and that's currently totally fine. Now, time is passing and these programs have been available, and the IRS is going to say, okay, you've known about this, you've spent too much time here, so correct it as soon as possible and everything will be totally fine. If you don't correct it and then they come to you first, there's no way to alleviate or reduce any potential penalty or interest. So that's why all of these forms I'm mentioning, if they apply to you and you haven't yet done it, do not worry. It can all be fixed. It can all be alleviated. There's a right way to do it. We're happy to explain that to you and answer any questions complimentary. If you want to work with us, great, but we do want you to correct what you have to correct, and there's currently time and capacity to do so. Last form is 8621. This requires a full hour webinar purely on this topic, but basically it's interest in a passive foreign investment company. So if you own 1%, interest, 2% interest, and you're like, that's nothing, I don't receive anything from it. But if that company abroad, let's say you own a corporation in Colombia and you inherited 2% years ago, but you've never seen a dollar from it, well, if that company derives most of its income from passive sources, meaning it just receives dividends, or it's another holding company, or if it holds foreign real estate, or if it's a holder of other various companies, you may have to inform not only of that company, but you sometimes may have to recognize income generated by that company. So if it's less than 10%, that's where it gets a little murky. If it's a company that derives most of its income from passive sources, that's where it gets a little murky. It can still be alleviated. You can make an election to treat that as having to recognize it each year, but that's another topic. We can go into it in more detail at another time. Send me an email, ask me a question, and I'm happy to discuss that. But these are the most common international tax forms. They will correlate in some way to the I-944, which we're going to get into now. So that's why I wanted to mention them. Okay, so part 3 is going to ask you for you or your household's financial assets, resources, and income. Part of your household, and this is very lengthy, so I'm not going to read line by line, but your household includes you, your spouse if you're married, your children. So even if they're under the age of 21, they still have to complete one of these forms. It's a form per family member of your household. Your other children not physically residing with you, for whom you are required to provide at least 50% of the financial report. Any other individuals to whom you provide or are required to provide at least 50% of their financial report are also persons that are part of your household. And any individual who provides to you at least 50% of your financial report or lists you as a dependent on their federal income tax return. So it doesn't have to be a family member, it doesn't have to be your spouse. If you live with your boyfriend or if you live with your girlfriend and they provide at least 50% of your financial support, they are part of your household for purposes of reporting. If you're a child, same rules, except that you also have to include information about your parents, your legal guardians, depending on the financial support that they provide to you. So item number 1, this one's gonna, item number one is always the one that throws everyone off. So we'll go into this one in more detail, and the rest is not as complex. So item number one of the application, they want you to list your, and I want to have the application up, so I'm going to pull that up at the same time. They want you to list your and your household's annual gross income from the most recent federal income tax returns, if any. You must provide an IRS tax transcript of your federal income tax return for the most recent tax year and the transcript of household members whose income you are including. They will consider your household annual gross income and any additional gross income from your household members listed in Part 2. This is where it's very important. Your household's annual gross income should be at least 125% of federal poverty guidelines. So we'll cover what federal poverty guidelines are shortly, but first let me tell you where you can find your household members' annual gross income.
I do want to say something. So when we're looking at the totality of the circumstances, when you look at the actual form, it's not going to ask for all the detailed breakdown of the different sources of household income. It's going to ask for totals, essentially. Correct. But in order for those totals to be, I mean, it does say, you know, list the source, but not with so much detail. The point is, in order for your total to be accurate, such that you comply with the declaration, because the declaration that you're going to sign on this form says that you are submitting not only the information, but the corresponding documents that prove the total sum. So they're going to want to see a statement for each source of income that you're factoring into that total. They want to make sure that you attest under penalty of perjury that the information is complete, true, and correct. This is where it gets tricky, right? You have to essentially calculate the household income to a T with a document that proves that source of income to do a total on the form. But they're going to look behind that total for the documents that verify it. It is a negative factor if your household income is below 125%. So you need it to be at minimum 125% of the poverty guidelines. But that doesn't make it a positive factor. It just means it's not a negative factor. If it's substantially above, then it's a positive factor. And if it's 250% of the what's called the poverty guideline, that means it's twice what the HHS 125% standard is, then it's a strong positive factor. So since it's kind of like, and I'll show at the end of this what the table that we generate looks like. You know, these are all the things that could be negative. These are all the things that could be positive. And then it's kind of like a weighted average. Like I'll look and say, okay, you have 10 positive factors, you have 12 negative, but then you have 2 heavily weighted positive. It kind of balances out. We always want to see more positive than negative. And that's why it's very important that this information be accurate, because even though we're seeing, okay, look, it's above 125% or 250%, but then your documents don't show that. The statements and documents that we're including don't prove the total, then they can discount the income completely and treat it as a negative factor because they say you misrepresented. So the stress I'm making here is it's got to be complete, it's got to be accurate, and we need to be able to have documents to prove that number, both so that it's not used against you and so that we can hopefully use it in your favor.
Correct. So again, this is from the actual application, total income from your tax return or item 1 on W-2. Only W-2 if you don't necessarily have the tax return or you aren't yet required to file the tax return. But this is a standard 2019-1040. 8B is your adjusted gross income, which they'll take into account your wages, your interest, dividends, IRA distributions, other income, which many times will come from various sources of foreign income as well. So if you don't have foreign source income, that's all going to be combined into your total, your Schedule 1 total income. That combined with certain adjustments, like if you made any IRA contributions that are actually just There are adjustments or deductions because you actually did pay that out. So that's not an actual part of your income for purposes of determining your adjusted gross income or your gross income from these purposes. But that's what they want to see on household income item 1 for each member of your household. And you have to have the tax return and the transcript to prove it, or W-2 if you did not actually yet file or weren't required to file. So again, this is where you can get your tax transcript. This is a site, it's free for everyone to register, irs.gov/individual/get transcripts. You can only, as of now, because of COVID-19 and because of so much, there's been so many closures in the IRS, you can only get the transcript online. To do that, you go to that site, the get transcripts, or you can Google IRS get transcripts. You are going to create an account. So you'll need to validate your social, your email address, and any personal account number from either a credit card, mortgage, home equity line, or car loan, and a mobile phone with your name on the account. You need those 4 things in order to be able to register for a tax account. Once you register for a tax account, you're able to download or request a transcript there. And that's what the immigration will require, not just a tax return. This is a process that does take time. So you should start this right away because they're going to mail you a PIN, even though mail is difficult to obtain these days from the IRS, but they will mail you a PIN within 10 days. Then with that PIN, you can finally access your transcripts. Okay, so it's free for everyone. It's a requirement. You're not required to have the IRS certify the transcript unless they specifically instruct you to do so. And they want you to submit not only IRS income tax transcripts, but also any tax returns that are filed with a foreign government if you or your household members were residing outside of the US during any time in the most recent tax year. So if for any reason you have foreign income sources and they file a tax return abroad, we would suggest to include that as well. If you weren't required to file a federal tax return in any of the prior 3 tax years, you could provide W-2 or a Social Security statement. And that's why on the actual item 1, they're saying tax return or W-2. And they're saying or W-2 if you weren't required to file a tax return. And then you'd have to provide an explanation as to why you were not required to file a tax return. The only explanation for not filing a tax return is if you did not generate any income necessary in order to file a tax return. So this shouldn't apply to many, or if you were not actually a US tax resident. So if you have a visa which allows you to work here, but you didn't spend 183 days, or you didn't spend the substantial presence test amount of days, you would file a 1040 NR if you received any US source income. Therefore, you would be required to file a tax return from that aspect. So it's very rare that you're not required to file a tax return unless you really absolutely made no income, or if you made no income at all, or you're not spending time in the US.
So for the purposes of the I-944 at this section, what they want to know is if you filed a federal tax return, and then if you put no, why not? So this is where H&CO comes into play. They will be able to, if you say you weren't subject to taxation because you were not a tax resident or because you made no income, those would be reasons, and that's the explanation that H&CO, based on your tax profile, will be able to advise. Mm-hmm. Now, if you didn't file the taxes because you say you are not subject to taxes, to US taxes, but you in fact were, which is one of the things that we're looking at, putting no, that you were not required to file a tax return would be considered a material misrepresentation for the purposes of immigration. So at that point, you need to be able to explain properly. Don't just say you weren't required to file it unless you have determined that you really weren't subject. You're better off putting other and explaining I wasn't aware that I had to file taxes, or, but don't put conclusively that you were not required to file a tax return if you in fact were. And if you were required, I would suggest that you do what you need to do to properly file, because we're not clear to what extent they're going to be holding it against people who, failed to disclose taxes. The second thing that I think is really important that Nicole stressed is your foreign tax return. Now, while that question is asking about federal tax return, any income that you derive from abroad that is listed on your form, it's important we list it because we want to make sure that your income is reflected, one, for completeness, and two, it'll be a benefit to you. Any employment you had that you're listing, hey, I worked here, or I was the owner of this company, those are positive factors, but they're going to want to see that reflected in income. So what is USCIS going to do? They're going to go to the tax return that is attached to the I-944, even if it's a foreign tax return, for the relevant period, and they are going to be looking for that tax return to reflect that income. And if that foreign tax return doesn't reflect that income, you must be prepared to explain why not. Because otherwise they'll just say, we think you're lying because you didn't disclose it on a tax return. Now, I think we all know that tax rules are different in different countries. And so there are many reasons why you may not disclose certain income on a foreign tax return. Some countries only have asset tax, don't have income tax. So these are things that you need to be prepared to explain. And a US CPA, what I love about H&CO is that they deal with a lot of international clients, so they're very familiar with a lot of these documents, and they'll be able to guide you. But you may need to get something from your foreign CPA explaining that you derive that income and what is missing from your tax return and why it's not reflected. Because I'm telling you, I've seen it. They are looking at the minutia, and they are everything you represent. They want a document that proves it. And if the document is inconsistent with what you're saying, that's going to be a problem.
Correct. So again, it's going to be a case-by-case scenario. If for any reason you did not file, it's rare to not have been required to file a tax return, but still have some type of work-related visa, unless, perhaps an EB-5 visa, I can see that if they generated absolutely no income, but they will get something from the actual EB-5 project. So it's going to be extremely, extremely rare to not have been required to file a tax return, unless you really did not meet the substantial presence test of any sort, or you did not receive any U.S. source income. But if you worked here temporarily, you got paid U.S. source income, you're required to file a tax return, a Form 1040-NR, which is for a non-resident alien. They still have to file a Form 1040-NR, which is purely disclosing U.S. source income, okay? So it's going to be a case-by-case scenario in when you weren't required to file one. I just saw a question, which is going to lead us to our next, the next part of this. And the question was, what about gifts? Let me actually put it. So the question was, what about gifts? Does that count towards the guidelines, considering it is not reported on tax returns? So again, here in part 6, they ask if you or your household received additional income on a continuing weekly, monthly, or annual basis during the most recent tax year, and the income is not listed on the tax return, provide the amount of the additional income and attach evidence of the additional income. So if you receive foreign gifts, and let's say that $60,000 that you received in foreign gifts, and it's continuous, meaning it's not a one-time thing, because they're saying on a continuing monthly, annual, or weekly basis, then we can include that amount as additional income on line 6, which I believe, and Michelle, correct me if I'm wrong, that additional income does help to see what your financial picture is, like whether you're a potential public charge or not. So while it's not a taxable event, while it wouldn't have been reported depending on the circumstances, on the amount that was received and from whom, it's still something that is required to be included and would help you or count towards your total compensation that you receive in order to support yourself. And for that, we always request proof of, at least proof of the gift. So it was a wire transfer from my father. He's sending me $25,000 every single year. Then we'd want to see that $25,000 wire transfer. They want to know, when do you anticipate you or your household will stop receiving this additional income? So that's hard whenever your father decides not to anymore. It's a case-by-case subject. Other type of additional income that's not included in your tax return could be child support. It could be alimony, that depending on the year that you were divorced, whether it was 2018 or afterwards, because that is no longer taxable to the recipient, but it depends on when the divorce agreement was signed. So there is some type of income that wouldn't be part of your tax return, but that's still going to be included on a separate line item as an annual amount received, or the total, and they want to know the total amount that's been received in the actual time of filing. So any documentation that supplements that, we can count, and I believe that this does help in your overall general financial picture.
Right. And you know, for people that are concerned about, well, I don't want to disclose that income because, you know, then I'm going to get taxed on it. That's exactly why we're advising you speak to a CPA, because all income, for the form to be complete and the information to be accurate, all income must be disclosed. Mm-hmm. As much income as you disclose benefits you for the purposes of this analysis with immigration. And sure, a lot of this income is not going to be taxable, most likely. And you know, a CPA can advise you of what the tax liability of it is. Now, if you're receiving, you know, income in this year, and that's, you know, you became a tax resident in this year, this is the year you would be disclosing it. So that's also important, because that way when we get the statement, if they ask, well, why isn't this reflected in your tax return? Well, you don't have the most current tax return, and this was income that was not in that prior year. So there's certain things that you'll be earning presently, and we need to just understand the clear financial picture, so that when I take my client into the interview and the officer starts asking questions like, well, you say you're making this money, but I don't see that in your tax return, we can explain, well, that's because that's income that's current, and, you know, that's what's relevant. It really, the past, they're not looking at it from the past also. So if you didn't make much income in years prior, but you're currently making income, they're focused on what you're doing now and what you're doing in the future. But the past gives them a picture of how reliable that information is. Because if you know, had never worked, if you're 45 years old, had never worked, and then suddenly you're claiming that this year you're making hundreds of thousands of dollars, they may be suspicious as to whether or not that's true.
Correct. I see another question, which is, what if that person is retired, no income, is getting a sponsor, a 1864? So, and let me make sure I understand this question. If
let me address
getting, yeah, go ahead.
Because regardless, even if they're getting an I-864 and the person's retired, they're going to be filing an I-944 form. Okay, mm-hmm. The I-944 is required. The form is what the totality of the circumstances test is based on. Before, immigration would simply accept a valid I-864 as sufficient evidence to overcome any public charge inadmissibility. That is no longer the case. Under the totality of the circumstances, an I-864 may be a positive factor depending on the closeness of the relationship between the sponsor and the beneficiary, but it's just one factor. Your age above 65 is a negative factor. Being unemployed is a negative factor. Having health issues is a negative factor. They have essentially made it so that very young people and older people who are retired are going to have a very hard time overcoming the public charge, which is exactly why we need to make sure that as much as we can disclose about assets, retirement benefits, you know, health insurance, there are a lot of factors that we are going to be reflecting in your case to highlight that they're positive factors to overcome those negative. So, you know, if you're retired, but someone is giving you money every month, that may be income. Even if you have the I-864, someone's paying your bills. So that's important. If you're living with someone, that's the household income we're talking about. If you're receiving money from a pension, that is income. If you're receiving retirement benefits, that's income. If you have a house that you have rented out and you're receiving rental income from, that's income. So these are all things that we're trying to identify to make sure that the financial picture is complete.
Correct. So, and if you're, again, they ask for your household, which includes any individuals to whom you any individual who provides to you at least 50% of your financial support. So if you're retired with no income, but somebody in your house, there's someone in your household, and Michelle, maybe you can answer this question. Any individual who provides you at least 50% of your financial report, whether or not they physically live under the same roof?
Right. So like if your child supports you, they pay your rent, they pay your health insurance, or they list you as a dependent on their tax return, they are part of your household, and you need to disclose the income of them. So if that person happens to be your sponsor for your I-864, you're going to basically be showing the same financial information that's on that I-864 as your household income. And something that we have seen is an increasing trend in immigration. They are looking at that I-864 very closely with respect to the relationship between the sponsor and the beneficiary. If your sponsor is not a close relation, they are discounting that I-864 because their argument is that person is unlikely to take financial responsibility for you in the event of something happening. So they're really, having your boss or your friend or your cousin sign an I-864 for you is not a strong case as if it was your child or your parent or your spouse. So you always want to be looking for a sponsor that is proximate to you. It didn't used to be the case at all, but that's how it's being looked at now. And they're also talking about enforcing the I-864 as a financial contract, which it is, meaning they can go after that person for any benefits. So that's another thing, that we as the attorneys helping you will guide you on.
So I hope that answers your question, that if you're retired with no income and you're sponsored, well, then they may meet one of these definitions of being part of your household, and therefore their income would be what's listed and what is counted, and their income and their assets and their information depending on what part of your household they are. Okay, so that's, again, item one, the income. All sources of income, whether it's reported in your tax return or not, then they ask, any income that you're reporting, is it from illegal sources? Hopefully not, but if it is, you have to disclose that it is. Hopefully it's not. So as we mentioned before, but I'll show you here, these are the poverty guidelines, and this is for the 48 states. Alaska and Hawaii are not included. Your household's annual gross income should be at least 125% of the federal poverty guidelines for the most recent year as set forth by the HHS. So you can do a quick Google search, poverty guideline, and it'll show you this table. So if you're a family of one, then it's $12,760, so forth and so on. So a family of four, they should have at least 125% of that, which would be $32,750. This is not, again, a positive attribute, but it's basically should be at minimum what's informed. And there's a match between what your assets should be if you don't meet this. So if your household annual gross income is less than 125%, then you may demonstrate that the total value of your assets and resources is 5 times the difference between your household's gross income and 125%. So if your income is $20,000, you're a family of 4, then your assets must be $63,750. Again, you don't want to just meet the bare minimum. Hopefully can, amongst all the resources and assets available, show that it's higher than that, but that's basically the 125% minus what you made, the difference $12,750 multiplied by 5. If you're a spouse or a child, then it's at least 3 times. So it's slightly different depending on your status. Next, they want to see assets. Okay, so I'll show you on the application. This is all regarding income. They ask, is it illegal? What sources? If they received additional income, etc. But now they want to know your household assets and resources, which is basically page 6, or it starts with question 9 on part 3. List only assets that can be converted into cash within 12 months and provide the value of any asset held in the United States or outside of the United States. That's why. Let's look at what the actual assets can be. So type of asset, checking. checking accounts, savings accounts, annuities, stocks, bonds, certificates of deposits, a retirement account or educational account, real estate holdings, or other, whether it's in the US or outside of the US. Again, we always request a tax return to see, to begin. If someone says, oh, I have $100,000 in an account in Colombia, but we don't see it on your tax return, that's going to be a big issue because everything's not matching up, and it should, because you have to comply with the income tax rules and requirements. Therefore, we always suggest, let's try to alleviate that. There's one of many options available to alleviate that, but they want to know any asset that's convertible to cash within 12 month period, whether it's inside of the US or outside of the US. If it's outside of the US, it has to be converted to US dollars. We understand that a lot of currencies right now, like Venezuelan currency, doesn't exactly translate to what it truly is, but there's supplemental information that the IRS has received from us that explains like truly what the value of that asset is. So who's the household member that owns the asset? What is the type of actual asset, and what is the amount of that asset? Okay, and any asset that can be converted to cash, not your car unless you have more than one. Okay, so many people say this is my automobile, but unless you have more than one, you cannot include the automobile as an actual asset. If you own a home, you can include the net value of your home as an asset. The net value is the appraised value of the home minus the sum of loans secured by a mortgage, trust deed, or other lien. If you wish to include the net value of your home, then you must include documentation demonstrating that you own it, and that documentation will be in the form of a trust deed or evidence of a trust deed or any other lien on the home, or appraisals that also show the value, but that you're the actual owner. So there's a lot of documentation to supplement every single type of asset. And we like to request 12 months of statements, but the value of the asset when we're filing is what we'll use. Again, wherever it is worldwide, this will help your case. It should match the tax return as required. All of these assets, except for real estate holdings, would be on your tax return. It's a very common mistake to assume that you have to disclose real estate held abroad on your tax return. No. You would have to report rental income derived from that real estate, but you don't necessarily have to include foreign real estate on your individual income tax return as a foreign financial asset, because that's not a foreign financial asset. Retirement accounts or stocks, bonds, annuities, savings, banks, yes. But real estate, this is where it gets tricky. That's why it's not entirely black and white. I wish it were, but you're not going to disclose the value of foreign real estate. You would disclose the income generated by that foreign real estate. You would disclose the sale of that real estate. But if you own you own it personally under your personal name, you wouldn't disclose. If you own interest in a foreign company, then that would be what's disclosed as the actual value. So if you own 10% interest in a foreign corporation that owns real estate that's valued at $100,000, you would have $10,000 to show here. And we would request the proof of stock certificates that show that you're the actual holder of that interest, and then the balance sheet and the value of that real estate to prove how much of that asset is actually yours, and that it can be actually included because there's some type of trust or deed. So it's not the real estate, but the actual interest in the corporation, that's the asset that's reported.
So just to go through here, this is again one of those places where the immigration and the tax deviate, right? So in the US, we pay income tax, not asset tax. So it's not, as Nicole has said, you're not going to list all your assets on our IRS tax return. But for the purposes of this application, immigration wants a total of your assets. If your assets, net assets, meaning the total value of your assets minus the total value of your liabilities and debts that are attributable to you, right? So that also includes liabilities and debts of companies that you own, liabilities and debts, that are within the context of your household we've got to look at because they may be attributable to you in some way. So it's very important that we look at this, and we want to be as complete because the form requires you to be complete in listing any assets that are available to you, any assets, liabilities that you are responsible for. And so I just want to emphasize here that completing this form and sharing this information and documenting this information is a requirement. It will not necessarily, and most likely will have no tax liability unless, you know, that asset or holding, as you mentioned, is also a source of income. What you're going to end up disclosing then on your return as a source is the income you derive from that real estate source. I think there's actually a question on here about, you know, I'm temporarily renting my primary residence because I'm displaced in another location. You have to disclose your income, whatever that source of income. It will not, on this form, it will not necessarily result in a tax liability if, let's say, you're receiving property on an income on a property you're renting, but the cost of that property is more than the income. So I rent out my house, but what I pay in property taxes, maintenance, and all these other things are basically zero out the income. You still want to be disclosing to your accountant that you have this source of income so they can calculate it for you and reflect it where necessary on the tax return. And you want to disclose that income in your total income analysis on this application. Now, if it's not reflected on your tax return, this is why you have your tax professional provide you an explanation, and we can include it in writing as to why that income wasn't reflected on your return. I'm not a tax professional. That's why you're talking to Nicole.
Correct. So here is a supplemental income and loss. It's a Schedule E, and it goes within your 1040 because it feeds, it's what supplements all the information that's on the first two pages of your 1040. So many times, many times, you will have a rental property that actually doesn't produce a net profit. That does not mean that you do not disclose it. It has to be disclosed. It's, you would say $12,000 here, and then you would show what your actual expenses are. They could fall into one of these categories. Depreciation expense is a big expense that eats away typically at most of the actual income. If it's your primary residence that you own directly, like there's no mortgage. But here it would produce an actual a loss that then feeds into your tax return. So here is where it gets tricky, because from your adjusted income, you don't receive income from the property, because if you receive $10,000 but you actually have expenses of $12,000 that you actually pay out, then yes, you don't have income from there. So from reporting it on I-944, it's not part of your gross income because it nets out against the actual expenses that it costs you. So you're not making you don't have a positive result in that. But from a tax reporting standpoint, you do have to disclose all any supplemental income, even if it produces a loss, because IRS says just let's alleviate any doubt and just show me your income, even if you don't have to pay tax. That's why we file tax returns. Many people, well, I don't have income. If they waited, okay, only file an income tax return if you actually made taxable income, there would be so much gray area. That's why in most cases, 99% of the cases, you have to disclose, even if you don't pay tax. Or many times you could even be owed a refund, and people are like, I didn't report because I don't have any taxable income. That's not the way the IRS works. The IRS wants to know any income that was derived. That doesn't mean it's taxable income. So revenue, losses, net income is negative, tax nothing. But if they only wanted to see tax returns that were actually showing a positive result, there would be so much, it would be a disaster. And that's why I tell people the IRS says, let's remove any doubt and just disclose everything, so that way I don't have to wonder, did you actually not report income or did you? So when in doubt, it's always reportable, especially if it produces a net result. But even if it produces a loss, it is still reportable. So, and it would go on your Schedule E, and it's a very simple, it's not going to affect you tax-wise, but it would actually just, I'm sorry, Michelle, that might have been you muting. I don't know if everyone can still hear me. Okay, I think we're good. So this is where you would disclose that in the supplemental E. It doesn't necessarily go on your I-944 as net income because it's not a gross actual income, but it would go on your actual tax return. This is all your assets, again, whether it's foreign or US. Go ahead.
So let's do, there was a question there about art and assets. So one thing I just want to point out, other assets, it's on page 6 of the I-944 instructions, but you can list assets that can be converted into cash within 12 months. That is the definition of an asset. So if it's an asset that you cannot convert in 12 months, let's say it's assets you have in a trust that you don't have the authority to convert, then you're not going to be able to list them. It's specific to assets you can convert. For any assets you list on your asset, you must include the name of the asset holder, the description of the asset, the proof of ownership, and the basis for your claim of the net cash value of that asset. So they want to see, for example, for cash or money in accounts, you want to see your bank account statements, annuities, statements, stocks and bonds. They want to see the certificates of deposit and the actual stock. For retirement accounts or educational accounts, they want to see the actual statement. Real estate holdings, the net cash value of the real estate holdings. This is the things that Nicole is assisting to help you guys calculate, but you know, an appraisal. Any other substantial assets, you're likely going to need an appraisal. If you have jewelry collection, for example, you can use that, but you're going to need an appraisal. If you have art, you're going to need an appraisal. You're going to need a document that shows not that you own it and or someone in your household owns it so that it's accessible to you, and that you have to prove where you're sourcing that value of it. You can't just say, I have this painting that's worth $2 million. They're not going to accept that. You need to have some sort of appraisal or valuation to support that.
Correct. And another question, for illiquid assets, how do you provide a valuation? Well, when you say illiquid assets, it's not, if it can't convert to cash within 12 months, but I'll answer the standpoint from interest in a corporation that you can convert or that you could sell or that is convertible. There you have an actual, there is a value to that interest, and the standard method is a balance sheet that shows the actual assets and liabilities and then your interest of ownership in that. It's a tricky issue when it can convert, whether it can convert into cash within 12 months. I don't think it's going to help your entire case, but it is worth including. And when it comes to tax reporting, you do have to disclose that, but there is a simple valuation, which is your percentage in that company, the assets minus liabilities, and the percentage of interest in that company. That's the most standard. We're not going to do an actual appraisal of that company because, again, that company, the interest in that company cannot necessarily be converted into cash within 12 months, or perhaps it can, but it's a rather gray area from that standpoint. So I don't think that's really going to be the asset that helps you build your case, but it is something that should be disclosed on your tax return at the very least, and in some cases would help your case, so long as you have an actual balance sheet or any audited financial statement that's proof of the value of your interest in that company. Okay?
So primary evidence for USCIS will always be a tax transcript for the company. So what's been filed with the IRS, certified by the IRS.
He's speaking about a foreign, you mean
like
even
US,
from the foreign,
yes. You're talking about a US company, right? You have a US company and you say, look, I have a 50% stake in this company or 100% stake in this company. That's an asset. Can I use that value? How do I use that value? If you were to use the, balance sheet test, you would be using a tax transcript, and you'd need to make sure that those numbers are reflected on the Schedule L as far as USCIS would be concerned. In terms of companies where I have been able to show this asset as convertible to cash, I think you could argue any company with respect to the balance sheet is convertible to cash, because this is, you're literally saying I have this much cash inventory, less these liabilities, and if I was to liquidate tomorrow, this is what I would net. anything that you're trying to value based on net income or any of those projections as if you were trying to sell it, that would not work. However, I have used audited financials where there was a deal memo of a company that was in the process of being sold. So if you're in the process of, if you have a buyer and you're negotiating a price and you have documents to show that you're in the process of selling the company and you have audited financials, you may be able to use that. But I don't think that that's going to be a strong case. I mean, the only reason I would say that that's a 12-month one is because the deal's on the table. And it's already pretty clear based on audited financials, finances and the whatever agreement is being negotiated on the sale price, there are terms that give an approximate valuation. And
Raphael, you asked shares in a private company, for example. So again, you have to report a Form 5471, and depending on your ownership, it has to be disclosed every single year. But within this Form 5471, which would detail your interest in a private foreign company, there is a section that is the actual balance sheet that would show, again, what your true value of the value of your interest in that company, if you were to liquidate it, would be, which would be the assets minus the liabilities. So this is how you provide a valuation. One, how you report it to the IRS. There is a balance sheet that has to be disclosed of that foreign corporation, depending on your percentage of interest, but many times most people will have to disclose this. But you may also have to provide audited financial statements from abroad of that balance sheet, which I believe is commonly required in foreign countries to have an actual signed financial statement. So we will request that, but I wanted to show you, this is the Form 5471, which is for any U.S. tax resident to disclose interest in foreign companies. And it does have the balance sheet that you show. So that's how this all relates to actual assets. Again, evidence for everything must be included in order to include the actual value of the asset, and for all family members in your household as well, not just for you, but for the value of your household members' assets. Liabilities, same for you and your household. Examples of liabilities are mortgages, car loans, unpaid child or spousal support, unpaid taxes, credit card debt. This is something that kind of difficult to obtain from people because it's required to be disclosed, okay? You cannot not include that because you have to present a true and accurate picture of your entire financial capacity and that of your household. So right under assets, they want to know a detail of the liabilities or debts, and they provide some samples, but it could be other. And they want the actual most recent statement that shows the actual value of the actual value of the liability. Okay, so every single debt must come with documentation to prove the actual position at the time of applying or a certain period date. Okay, so that's for income, assets, and liabilities. These are other aspects of the Part 3 in the I-944 that also present your financial picture that don't necessarily tie into the tax perspective, but that are important that must be included. Okay, so it's not necessarily an option. You can't just say, here's my income, here's my assets and liabilities, I have $1 billion. No, every single piece has to be included and supplemented. So right after income, assets, and liabilities, they want to know your credit report and score. It cannot be, I get a lot of reports, Credit Karma. Credit Karma is great. I love it. It's a great resource, but that's not a valid actual credit reporting agency. The 3 nationwide credit reporting agencies are Equifax, Experian, and TransUnion. You can obtain a free credit report annually, and this is the site. It's also on the DHS site and on the I-944 informational site. Not everyone does have a credit report or credit score because it's typically with a social security number. So they want proof that you either have it, what is the score, And if you don't have it, documentation that demonstrates that you do not have a credit report or score with a credit bureau, which would just be a denial letter that they don't find your actual case in that.
And in this, I would recommend, that you ask, this is maybe something that if you're working with Nicole's office, that they can include in a letter that says, we assisted, we verified that the client does not have a credit report, see attached, because the client does not have a social security number, is unable to pull one. And that way you can show the denial and, or if it requires a social security to even request it, so you can't even do that, then just have a CPA or a statement from yourself saying, I do not have a social security number. And I attempted to pull the credit report and it's unavailable because I don't have a social security number. But immigration is very particular in that you can't just say, I don't have one. They want a document that supports that you weren't able to get one. So if you have a social security number, you got to have a credit report. If you don't, then you need a document that says, I don't have a credit report. I attempted to pull one, but because I don't have a social security number, I wasn't able to pull it.
And they mentioned that you may provide evidence of continued payment of bills if there is no credit report or credit score. Because you have to provide proof of your liabilities or debts, and that will be a statement, and that should show that you have continuously and timely paid your bills or any outstanding debts that you have, and that helps build your overall financial picture. Okay, so it's not, no, I don't have one because of that. No, I don't have one, but here I am paying all of my bills on time. Like, that helps build your case. So that's why, while the application is just a yes or no question, the instructions provide a lot more supplemental data that helps you build your actual file. So right after that, they go into, and let's look at it on the, I believe they also, hold on. They want to know if you have any negative credit history or any low credit score, if you've ever filed for bankruptcy in the United States or in a foreign country. So this is, from the US standpoint, I don't think hopefully most people won't have already had this as part during the time that they've been a US person, but if you have a bankruptcy case in any foreign country, then you have to say, yes, I do, and provide documentation and information. They want the place of filing, the country, the date, what type it was, or the equivalent, and we can help you understand what the equivalent of that might have been. So not just credit score, they want to know, are you good? Are you good on your word of payment history? Because that way it helps reduce the possibilities that you might become a public charge. Now, health insurance is the next aspect. And there's a lot of detail in the instructions, but I just want to show you on the actual application what they ask. Do you currently have health insurance? And then evidence of the health insurance, and then information about any premium tax credits or advanced premium tax credits, and proof of the deductibles. So this is an issue we see a lot. When you applied for in the health insurance facility online that they have, you may have put very, very, very low income so that you could get a low premium or the best possible amount of coverage that was supplemented. That all always comes full circle, and then everyone is very, very, very sadly surprised when they get the actual statement, which is an 8963 or a 1095 that shows this is how much we supplemented, this is how much you paid. Then based on your actual income, that may produce a premium tax credit or a penalty that you have to pay because you reported that you only made $12,000, or your estimate was $12,000, but you actually made $48,000. So they paid coverage for you as if somebody that made $12,000, and then they realized, like, no, you made this amount of money, therefore you owe us back, and it's typically a large chunk. So I always tell people it's not worth it. It's not worth it because it's always going to come back full circle. Everything is so interconnected these days with the IRS, with health insurance, with immigration. nothing is ever worth it, ever. And it always comes back even worse. So there's forms provided by various agencies to the IRS, and they basically know it, and they just want you to say, let me see what you're going to present, and I want to know if it matches what I already have. So it's a funny trick they play, that they ask you for information that they typically already know. That's why these premium tax credits or these supplements that are paid based on a certain number of income, when you actually have to report your income, which is evident by W-2s that are presented by your employer to the IRS, or by 1099s that somebody that's paid you has to give to the IRS, therefore you're just getting that match. They know how much income you actually end up making. So if they paid a huge portion of that thinking that you needed that assistance, you're gonna have to repay it back, okay? So they want documentation proving that you have insurance, what type of insurance, the terms of coverage, and the premiums that are actually paid, and evidence of the health insurance and the actual policy dates of when they apply. But all these 1095s, they always are available. You can't say, well, I just didn't get it. You probably just didn't receive it in the mail. They may not have your mailing address, but there definitely is one or another if you bought it on the insurance marketplace, or if you receive coverage from your employer, there is at least one of these forms that pertain to you. Before we go further into that, Raphael and Michelle, maybe you can answer this best. Good ranges for credit reports, out of curiosity. I know that from, so good ranges of credit report scores.
There's nothing in the guidelines of the totality of the circumstances test that they're going to, like, this credit range, credit score will be a negative, this will be a positive. I mean, it's not clear how they're looking at it. They're asking for it. But my gut is, if you have a negative credit report, anything that's below good, and all the credit reports will tell you, you're in the green, you're on the excellent scale, they'll give you ranges. So anything that's, below good, I think you're going to have them looking a little further into your financial picture, looking at that credit report to see maybe what are the factors that resulted in your lower score, and then making sure that your liabilities and your assets match what's in that credit report. I mean, I think the credit report is almost, it's less about the score as much as the score is an indicator for how true and accurate the information you've provided in the rest of the form is. And it's something that they can use to sort of identify, have you disclosed all the liabilities that financial institutions are looking at? Because I believe that's in your credit report, right?
Yes.
So like all your mortgages, any car loans you have. So if your credit report reflects things that you didn't disclose on your form, that could be an issue.
Correct. Your credit report does have the full summary of your liabilities that are tied to that social security number. They also do want foreign liabilities that may not be part of that. So it's going to show at least definitely every possible credit card you've ever opened, or any car loan or home loan that you've taken out. You also have to include the foreign liabilities that may not be within that credit report, but that you do have a requirement to disclose. And I just seen one more question about the credit report does not show any credit score. Is Credit Karma okay to show the credit score? If the credit report, well, perhaps you do not have an actual social security number, because if you do, then your credit report from Equifax or TransUnion would have an actual score. Credit Karma is not verifiable. It's not a legitimate agency from a credit reporting standpoint. Credit Karma is more of a friendly user tool that many people obtain. I think it's great to kind of give you an idea and give you a picture and help you, but it's not really the agency that provides proof of what your actual credit score is to immigration. That's why perhaps if you don't have a credit report with an actual score, maybe you don't actually have a credit history, or you don't have an actual social security number, because you would have a credit score from one of those, TransUnion or Equifax, if you did. So I hope that answers that. Back to the topic of insurance. Again, they want to know, do you have insurance? Show me proof. how much do you pay insurance, because that's an actual, the premium that you pay may not be reflected in any of the other aspects of your debts or liabilities, and may not even be in your tax return, because it's not a deduction. Sometimes it's not a deductible expense, depending on whether you're an employee or whatnot. So they want proof of how much the annual deductible or annual premium is, and dates as to when the policy terminates. And proof, if you haven't had insurance, proof that you will enroll or have enrolled, and that your coverage has not yet started. This is where Michelle was mentioning that your health is one of the factors, and they even mention in the instructions that you may provide an attestation from your physician regarding the prognosis of any medical condition that impacts your ability to go to work or to school. You may provide evidence of sufficient assets and resources to pay the cost of any reasonably anticipated medical treatment. Again, because they're measuring public charge, they want to see, okay, you don't have insurance, you're about to get insurance. If you don't have insurance, okay, do you not have any potential medical prognoses? They would want a letter from your treating physician. And if the physician says, yes, they are going to require a certain type of surgery, then you could provide proof of sufficient assets and resources to pay those costs alone. So if you answered no, again, then it's best to get a letter proving that you don't necessarily require insurance because you're in perfect health, but typically I believe having the insurance would help your case. I see a question within the chat. We are an E2 visa holder and we are doing a labor certification. We have reported and paid taxes, but last year and this year we have been using Obamacare subsidy. Will this be held against us?
So this is part of what we look at in the totality of the circumstances test. So, you know, we get this a lot, is receiving unemployment a public charge benefit. It shouldn't be, because it is not by definition a public charge benefit, because it is actually an earned benefit. You get it because you did credit hours and your employer paid unemployment insurance. But receiving unemployment insurance is an indicator that you're unemployed, which is a negative factor. So in the totality of the circumstances, it will be negative. As an E2 holder, if you receive a subsidy, is it by definition a public charge? It's not, right? So it's not one of the listed, this is a public charge benefit. But this analysis, this form has two parts. One, are you by definition a public charge because you received one of these listed benefits during a certain amount of months over a period that would make you a by definition removable or inadmissible public charge? So if you receive any of these benefits for a certain amount of time, you are by definition a public charge. An Obamacare subsidy does not make you by definition a public charge, but it will be looked at. Why? Because in order to qualify for that, you have to be below a certain threshold of income. And they are going to look at that and they say, well, if you're receiving a subsidy, what is that income level for your household? And is that inconsistent now with what you're saying on this form? And is it below what is the, poverty guideline? No. Okay. Well, is it between what we would consider a positive, which is 250% above the poverty guideline? So this is how it plays into it. It's not saying that you are by definition a public charge because you took it. The problem is it could be an adverse factor in the analysis of your inadmissibility as a public charge under the totality of the circumstances. So again, two things. You're either a public charge by definition because you took benefits, or you are prospectively to become a public charge under the totality of the circumstances test based on their multi-factor, very vague, pain in the rear end analysis. And that would make you inadmissible and they could deny your adjustment. So we're looking at it from both aspects. And so this is, again, I'm going back to, and as we get to the end, I'll sum up, what those other areas of the form are. Right now, we're just focusing on part 3, the financial. But we're really looking at these benefits to, one, just discount that you're not a public charge for having received these benefits at all. That's one factor. If you did that and you meet the threshold, then we're done. you're inadmissible. But if you overcome this, we still have to overcome the totality of the circumstances, and it will be considered. And that's what we're sort of looking at all these parts of the picture.
Correct.
I don't know.
So I saw an example of somebody that they're like, we claim Medicaid, or they had just reported like the lowest possible income to get an insurance benefit. And now when it's time to present this, it's not looking that good because they have income from foreign sources, they have significant assets abroad, and it's just all colliding with how they're portraying themselves in order to get these certain benefits, which this always comes full circle in some way or another. I always tell people, sooner or later, everything matches up. So do not disclose really low income. For example, somebody that wants to start a business or that wants to obtain credit, it was very convenient to include every possible expense to reduce their net income so they'd pay low tax. Now when it's time to get financing because they have a great opportunity to obtain credit or finance the purchase of machinery, the bank's looking at them, they're saying, no, you're not bankable, so you lose out on that. There's always a balance between what you report from a tax perspective and all the benefits that are afforded and awarded to you. And to do well in the US, I have always told people, the tax system, no tax system is perfect, but it does work. And even if it doesn't work, it's exactly what is always going to be used. Tax, it doesn't matter what the truth is, it matters what the IRS knows, is what I tell people. So if you didn't report it, you don't own it. From the IRS standpoint, you can't argue it. Everything should match what's reported to the IRS because that's always going to help you in some way or another. If you want to obtain lending or financing or credit and showing significant, showing losses, you're not going to be able to benefit from a lot of the programs. Right now, there's a great Main Street lending program. And I know of a lot of businesses, foreign businesses that come and they want to pay as little tax as possible. I say, well, yes, you didn't pay any tax, but now that you need the actual Main Street lending program financing, that's going to be 5-year, lowest possible interest rate, you don't qualify. This is how that all works when it comes to insurance and income tax and then banking. It all ties in. So the Obamacare part, it depends on, did you not disclose certain income to meet that because now it's going to come back, or how did it all tie together? So as Michelle said, it's not that itself is negative, it's in the totality of it because they're looking at, now they're seeing your overall picture and how everything tied in. Does I-944 have to be presented at any time during the green card application, and is there a deadline? Michelle?
The I-944 has to be filled out with the green card application.
Okay.
When you file your adjustment of status, if you do not include this application completely with all the requirements and the documentation to support it, they can deny your application automatically, or they can reject it, or worse, they can deny it as being incomplete, which means they charge you your fees and then deny it. And you have to refile and repay the fees. So this is a required form for any adjustment application. Now, there are some exceptions. There are certain categories that are exempted from it, and that you can see in the instruction. But most family-based and employment-based cases will require this as part of the adjustment.
And then Antonella asked, we didn't have health coverage since 1 year ago. We're waiting for next year to apply. Could this be an issue? Well, as they mentioned on the instructions, if you answered no, that you don't have insurance, you can provide information on how you plan to pay for any anticipated medical costs. They even mentioned that obtaining an attestation from your physician regarding the prognosis of any medical condition and whether this medical condition impacts your ability. So if you get a clean, good health report, perhaps you don't necessarily need insurance. It's neither, again, a negative nor a positive, but overall the entire picture is seen. So there's ways to supplement that issue by proving that you have $1 million in the bank and you have a clean health record, and look, I don't have insurance, or I'm going to apply next year, but I have this and this and that, that helps build your overall financial picture and your overall case for everything. So I don't think
I
that.
will add, as the attorney, we don't prepare the I-944 form. We early on identified that there were a lot of tax implications and liability issues that we weren't prepared to guide the clients on. So we instruct clients to use, compile the documentation needed, and then work with a CPA or a tax professional to ensure that they're completing the form correctly with regards to Part 3. The clients are required to fill out Parts 1, 2, 4, and 5, and then we will review it. My job as the attorney is looking at that information. If I see something that I think is maybe not accurate, I'll point it out. I'll ask some questions just to make sure that it's clear and that it's consistent with the instructions. But our job is to then run this totality of circumstances test, which is a multi-factor test. Yes, not having insurance or the resources available to obtain health insurance in the US can be considered a negative factor. Having health insurance to cover you is a positive factor. Having a health condition is a negative factor. So that there's all these, again, I'm like totaling up with a long list of, I think it's like, when you really itemize it, it's about like 36 or 40 factors. I'm totaling up, is this positive or negative? Is this positive or negative? And then trying to see, can I show that there's more positive than negatives? That's what the attorney will do. And that's the totality of the circumstances analysis that the officer is going to do at your interview based on all the different factors in your picture to determine whether or not you are inadmissible because you at some point in the future may become a public charge, which is the standard.
And I see a question. It says, we're E2 visa holders and we're doing a labor certification program. We have a daughter who awarded a Bright Future Scholarship. Congratulations, from Florida State. Should we use it or reject it? I got a Bright Future Scholarship from Florida State. So Bright Future Scholarships is when you have a certain GPA and certain test score that is awarded to anyone. I don't believe that in any capacity that's a negative. Michelle, correct?
No. So long as you are, if your child earns a scholarship, that's a boon. If you win a prize or an award, that's a boon. These are things that are awarded on merit, not need. Mm-hmm. Where the government is looking at is anything that is issued by a state or federal government as a cash benefit based on need. That's where they're saying, okay, if you depended on the government to cover these basic costs because you don't have enough financial resources to take care of your family or your household, that's where they're looking at, hey, there's a potential public charge issue here. But these are the specific public benefits that they're looking for as by definition public charge, and then it's the totality of the circumstances. I do want to stress, we need to complete an I-944 form for every single family member that is part of the application. Okay, so this is not one form for a household. Even though it talks about household income, it's from the perspective of each applicant that they're going to assess the totality of the circumstances. And this is why I want as many positive factors as possible, because let's say dad is an engineer who has a good salary, who's got assets. He's fine. On his picture, he's got no negatives approved, right? Now I go to the child. The child, under this ridiculous totality of the circumstances test, because they're under 18, that's a negative. Because they're unemployed, that's a negative. Because they don't have a degree, that's a negative. So there's all these negative factors just simply because of their age, similar with people that are over 65. But again, I want to be able to use the positive factors in the household income and assets to offset that. Now, do I really think, it would be ludicrous for them to hold a child to the standard of an adult with respect to public charge. But again, it's an I-944 application per family member. We really want to make sure that everything is complete and reflecting the household income and the financial assets for the benefit of the entire household. But there are negative factors that will be attributable just to a single person. If your wife is sick and has a health condition, that may not be something that's negative or adverse on your application, but it will be on your spouse's. So you want to make sure that there's positive factors that outweigh your spouse's negatives.
Okay, so let me see the other. We received Obamacare subsidy when we arrived 4 years ago during the initial months. We have now 3 years with private health insurance. Does that subsidy received 4 years ago have a negative impact? Everything that they're asking here for is like in the current year, or I believe that they're not going
the new definition of
fast.
public benefits. So they're asking about the new type of public. There were things that were a public charge before that continue to be so now, but they have added new benefits to what they consider a public benefit. With the new ones, they're only asking if you received them since October 2019, which is when the law became effective. So there were certain things that were always considered a public charge, but now they've added some new ones. For the new ones, it's only as of October 2019.
Okay, so I think that
But disclose everything and then consult with an attorney to modify. It's better to put it all in and then we shave off what's not relevant. But don't assume, oh, well, this I shouldn't disclose, because if you should have disclosed it, there's no way for the preparer or the person assisting you to know about it without you telling them. And number two, if you should have disclosed it and you didn't, and that form is submitted, immigration could say that you tried to hide something and therefore it was a material omission.
So everything here from the last part of part 3, it covers, again, public benefits. They're being very specific as to which public benefits they're referring to, because there are a large number of public benefits that exist in general, but they want to know, have you ever received, and when they're saying have you ever received, they're mentioning from this list. So have you ever received or are currently certified to receive in the future any of the following public benefits? And these are what they want to know. So federal cash assistance for income maintenance, supplemental security income, the temporary assistance for needy families, general assistance. These are programs that general assistance sounds like it's, oh, have I received general? No, it's an actual term of a public benefit that's offered by a governing agency of some sort. It's not just the concept of it, which reads rather general. But any Section 8 housing under a housing choice voucher program. So these require an application. If you haven't applied for a certain type of benefit, then it's a very simple answer of no, because you're typically not just awarded this, you wouldn't have just received it. You would have gone out of your way to apply for it. So if you haven't applied for one of these, or you haven't agreed to it because somebody provided you an application, then most likely you have not had any of these actual benefits, and you can mark that it's no. But if you did, they want to receive a lot of information regarding it. Also, if you've disenrolled, withdrawn, or requested to be disenrolled from these public benefits, I don't believe that the ACA health coverage, any subsidies are within this actual list. Federal funded Medicaid is, but I don't see anything that's relating to a lot of the health insurance coverages that came about when that was implemented in the past 3 years. Okay, so these are the public benefits that they're typically referencing whenever they mention them. And again, for you and your household. So ask around to make sure your wife or your spouse didn't go ahead and apply because she heard that her friend was applying and that everyone's getting this great benefit by doing this, because you want to disclose it so you can explain, or it's terrible to not disclose. They know anyways. Everything's all tied in with social security numbers of some sort and addresses and names. So make sure, ask around and say, this is the time to be honest, because you want to, this was the date, this was the amount received, reason, explanation, but it would be terrible not to include it. And then it does come about anyways, because in the application or the instructions, they mentioned that there will be research done on their part to look into this. And there's certain benefits that, based on whether you're in the armed forces, you could have received. This is a part that requires probably a lot of attention to detail on the instructions, because there's certain things depending on who, what, where, when, and how. So, for example, the following list is a list of exclusions from public benefit receipt consideration. If you belong to one of the following categories, submit evidence for the evidence listed for the applicable categories. And this is if you're a U.S. Armed Forces member, you could be excluded from having received one of them. Children acquiring U.S. citizenship. So children of U.S. citizens whose lawful admission for permanent residence is in the legal and physical custody of the U.S. citizen parent will result in the child automatically acquiring U.S. citizenship, or, hold on, no, I'm sorry. So the following is the list of exclusions from the actual public benefit. I don't understand, Michelle, why they mention what's the exclusion for children acquiring U.S. citizenship.
Because, so what they're saying is that there are certain children that when they apply for residence, they will automatically become citizens because they're children of citizens. So U.S. citizens are entitled to these benefits. So they're saying if you're the child and you're filing, it's how just caveat, this is how I became a citizen. My mom was a citizen. I immigrated to the country as a young child. I applied for residency, and I was a lawful permanent resident for 1 day before I became a citizen. So it's basically, I was born to a U.S. citizen abroad, but the way I can become a citizen myself is by first becoming a resident and then a citizen. And so therefore they're recognizing that if the child is essentially a citizen, U.S. citizens are entitled to these benefits.
To those benefits, okay.
But again, my rule of thumb is disclose, conservatively assume the worst, and then pick away at where the exceptions lie. And that's what your attorney will do. Your attorney will argue for you at the interview, well, no, this should not be considered a public benefit. No, this is not something that, even though this was Medicaid, this should not be disclosed as something because it falls under this exception. This is why you have counsel.
Correct.
I did see a question about E2s and the COVID checks.
Stimulus check. Okay.
So let's talk a little bit about this. The stimulus checks are rebate checks, right? They're an earned benefit, meaning you don't get one if you didn't file and pay taxes, right? Am I correct?
Well, no, you can. This was a rebate from all the taxes we've paid in time, because even if you hadn't ever filed a tax return and you weren't required to file a tax return, you could have still included your information and bank account and been eligible for an actual stimulus check. But it was a rebate, but I believe they mean like a rebate in general, because it did go to people that haven't ever paid tax.
So the way it's being interpreted in immigration is, if that rebate check is earned based on you having paid prior taxes, then it's considered an earned income, right? So you don't have to disclose it. It's not a government handout because it's based on taxes you paid. Anybody who is applying for adjustment of status who has not paid U.S. income taxes and received one of those checks, you really need to think twice about whether or not you're going to cash it. I know there was a big issue where a bunch of students received those checks because students can get a social security number and they file taxes, but they don't actually pay income taxes. They're exempt from it. So they technically have to return those checks. And the federal government put out on the IRS website that they need to return those checks. So you really need to look at the IRS website, look at the rebate checks, and verify that you are eligible.
Correct. Well, and especially, I guess when I was citizens that have citizenship, even if they hadn't had to have filed a tax return or have paid tax, they were eligible to include their information and receive an economic stimulus check. So that is a big disclosure for actual citizenship.
When I'm saying students, I'm talking about international students, people here on an F1,
correct.
just to be clear,
Correct.
like a U.S.
non-citizen.
Right. I'm saying anybody that is not a U.S. citizen or lawful permanent resident that received these benefit checks, you want to make sure you had a social security number, that you paid taxes, and then it's an earned benefit. Now, one of the things, E2s have a social security number, so they should be eligible to receive it. But the children don't. So there was a rule that said that if you have any family members listed on your tax return that have a TIN, a tax identification number, that you weren't eligible for the rebate check. So then I think you need to go back to the IRS rules, look at it, and make sure that you are eligible for those checks.
Correct.
It's a tricky thing. And again, we're advising people because we don't know how this is going to be interpreted down the road. And I can't tell you that, hey, it's not going to be a problem, because it could be. If the law says that you were not eligible to receive that benefit, that the government gave it to you, and that's not an excuse. I mean, as far as immigration is concerned, ignorance of the law is never a defense. And you really, as an attorney, I'm telling clients, look, if you cannot clear-cut point to me that you were eligible for this benefit, I can't clear-cut guarantee you that that's going to be something they don't hold against you down the road.
Correct. So, and same as you're mentioning that we don't know how this is going to affect you later down the road. We've seen with the PPP program, which some of you might have heard about, it's a paycheck protection program. Sounded wonderful, beautiful, great. Then later on, some agencies, governing agencies, said, if you've received the paycheck protection program and you're a government contractor, we want you to tell us about it. We're not gonna pay you we're not gonna compensate you if you used those funds to pay payroll and you also charge them back. So that's something that came later down the road, and that's why a lot of clients were like, I'm hesitant. I'm a U.S. new subsidiary here, but because I have this potential contract as a government contractor, I don't want that to look bad on my part. And that was probably the safest bet, because as more information comes out, government contractors are required to ask anyone applying a bid, did you obtain PPP funds? So same with the stimulus check, as you mentioned. It's that you haven't cashed it, that you should return it. I don't know that you have a possibility to return it, but that you haven't cashed it, that may be a possible option. I don't know how that will come into play with the actual IRS and requirement, but if you've paid taxes and it's considered a rebate, then technically there was a lot of different rules. First, they weren't going to give it to anyone that didn't have a social security number. Then they kind of expanded it to include anyone that had a TIN, a temporary tax ID, as well as social. So that there's been a lot of changes happening there, but I don't believe there's even the possibility of returning it, so much as when you file your tax return in 2021 for 2020, trust me, there's going to be some questions about it. And that's why to have that portion handy. Some people will have to pay it back when they file their tax return in 2021, because a lot of people received it that shouldn't have received it because their income thresholds were high. So that's going to come back in 2021. And that's why always everything comes back full circle. Be aware of that portion. But that you can actually return it. I wouldn't say you can go ahead and return it, because I don't even know that they could process it, but keep
they're actually, the IRS website does have instructions for people to return stimulus checks that were, because there were foreign workers who were living overseas who received them, but maybe had filed taxes last year, but they're no longer here, so they're not entitled to. Non-resident aliens, people that file as non-resident aliens are not supposed to. So, you may have received one, but if you are a non-resident alien or filing as a non-resident alien for 2020, then you should not be taking it. So there is, the IRS website does have a page where they talk about how to repay the money. So I would
here it is on the instructions for repayment. So And this question, does someone who is a resident alien qualify for the payment? So if a person who is a non-resident alien in 2020 is not eligible for the payment, remember, this is where it gets tricky with the non-resident alien and a resident alien for tax purposes. And here's where it says your alien status. So if you meet the substantial presence test, you are a resident alien for all purposes of IRS. And when this on the economic impact payment. So if you are a resident alien with a valid social security number, you're eligible for the payment only if you're a qualifying resident in 2020 and cannot be claimed as a dependent of another taxpayer for 2020. So if you're a student and you could be claimed as a dependent of another taxpayer, then you don't qualify. But if you're a qualifying resident alien in 2019 and you're also a qualifying resident in 2020, that cannot be claimed, then you would qualify, again, from a tax perspective. Now, how it looks from an immigration perspective, those are two separate worlds. So being able to qualify for something and how it actually affects your total case from a public charge are two different areas. So this is where it gets a little bit tricky. This is where you mentioned that if anyone who received a payment but is not a qualifying resident alien for 2020 can return the payment, and they give you the instructions for actual repayment of that right here. But how that affects you is
anybody that has received a rebate and filed and paid taxes in 2019 and 2020, I'm saying this is an earned benefit and they did nothing wrong in receiving. Now, if you receive the benefit and you are ineligible, I think that's a problem. You need to return it. And I cannot imagine a circumstance where a non-immigrant would receive the benefit and not have paid taxes, because there's no reason. They are not going to issue it to somebody that in 2019 filed a 1040 NR, right? So if you filed as a non-resident, they're not sending you the check. Now, there may be situations where somebody filed as a resident in 2019, but has since moved back to their home country. But that person wouldn't be filing for an adjustment of status in 2020. Right?
And because they're not a 2020 resident alien, then technically, based on that rule, they'd also have to return the check. So they may have received it and they still would need to return the check. It's a U.S. citizen born and raised here that, let's say, a widower, and she makes only income that's below a certain threshold. She never had to pay tax or file a tax return. She'd receive the check. She'd be eligible for the check because she's a U.S. citizen. But when you are not a citizen, then it's a lot of rules, facts, and circumstances. But if you received it and you pay taxes and you file a tax return because that's the only way to have received it, and you're still a resident alien in 2020 that will also pay and contribute tax, then technically this is an earned benefit because it is a rebate. So for the most part, it's a rebate. They just then expanded it to other areas. So that's why the wording gets a little bit tricky, but you can mail it back. I had some student that was insistent, and I'm like, let's even see, let's pretend that you're eligible for this. Show me how you'd apply. And he was not able to even process it. So it's tricky, and it's a little bit difficult to actually have gotten it if you weren't eligible, but that you're still eligible based on 2020 activity, that's a factor that everybody has to consider and look at. So again, these are the public benefit questions that are the last part, and they want to know, did you receive it? If so, did you apply? Did you disenroll? What are the dates? Show us proof that you've withdrawn. All the information necessary as it applies to an actual public benefit. And then the last question is item number 26, applications for or receipt of immigration fee waivers. Indicate whether or not you have applied or received a fee waiver when applying for an immigration benefit. If you answered yes, list when you received the fee waiver and the type of immigration benefit for which you applied. So that is the last part of the actual application. Then it goes on to general information. Hold on. So they want to list the type of immigration benefit and the fee waiver and the receipt number of that fee waiver for you or anyone in your household. Okay. Then it goes on to part 4, which is your education and skills. But we were focusing today on part 3. I don't know if I think we've been answering questions as we go, so there may not be any other questions. But Michelle, if you want to
So just to, I'll wrap it up. And just because we'll circulate this to the clients that we're working with together, you know, it's very important that for those of you that are working with an accountant and an attorney on this, the first thing you need to do is sit down and compile all the documents that you're going to need for this application. I did this for myself, and I've done it for other clients in the sense that I've walked them through it. You need to set aside, I would say, 3 to 4 hours in order to pull all the documents together. Remember, you're going to be requesting tax transcripts. You're going to need to pull bank statements for every single bank account that you have. You're going to need to be pulling mortgage statements for all and liability statements for every liability. You're going to need to be pulling documents that prove ownership of any assets that you have. So if you have property, you need the deed. You're going to need to have valuation documents. You're going to need to go through and pull all the documents you need to prove that you have health insurance and coverage. If you have a family with a medical condition, you're going to have to contact your doctor to get the letter about the medical condition. So going through all these different documents, prepare to set aside 3 to 4 hours just to compile the documents you're going to need to fill out this form. And then you're going to have to submit all those documents to whoever's assisting you with this application and give them time to evaluate and assess it. There will be questions, more information may be asked. Everything that you submit with regards to foreign assets or documents that are in another language must be translated with a certified translation before they're submitted to immigration. Because immigration doesn't just want this form. The instructions specifically say that for every item on that form, you need to provide the document that proves what is represented in that summary form. And you have to fill this form out for every single family member that is applying for you. So it's a separate form for each person. Even though we talk about household income, there are certain aspects that relate to the individual that don't relate to the household. So again, you want to make sure that that information is being accurately completed for the person that that particular form relates to, and that all the documents related to that person are attached. So the insurance documents for you are not the insurance documents for your wife or child. You know, auto loan liabilities may not be your wife's liability. So just be aware that you're going to be compiling different packages for each application. They need to be complete. I would recommend that you compile all the documents and send them in one at one time to whoever is assisting you with this, because information will get lost, and these forms require a total picture. So if I only have half the assets and I can't fill out the form, and I'm not going to do it multiple times. So I wait for the client to give me everything, and then we prepare the package based on everything. And so these are just a couple of tips. So give yourself a day that you're going to set aside to pull this documentation together. Be prepared that there will be more questions if someone is assisting you, and try to be, you know, understanding of the complexity of this information. If it's complex for you to understand what your financial picture is, imagine how much longer it's going to take for somebody else to go through it and make sure that everything's well documented, including, you know, assessing whether or not there was a tax liability. And so, you know, we're not trying to make your life more difficult when we ask you for more information or when we tell you we haven't finished yet. We're really just trying to make sure that we do a thorough job, because the form does require complete, truthful, and accurate information. And any deviation from that could be problematic in your case.
Correct. Perfect. Well, my email's there for any questions. If any tax questions that I might have brought up that you say, that may apply to me, how can I fix that or alleviate that? Happy to have a complimentary discussion and tell you more or less what's the best remedy or whether it requires a remedy. But I think this was a good general, a lot of information. Nosotros todos hablamos español en la oficina. Yo soy de los Estados Unidos, pero soy colombiana, mi mamá, y por eso hablamos español. But so if you're more comfortable speaking Spanish, we're able to answer any questions in Spanish, and we'll be doing another one of these webinars in Spanish as well, and answering any other questions that may pop up after this. So thank you all for your time. We'll be in touch for the next one. Thank you so much, Michelle. You're Incredible. Okay. Take care, everyone. Have a good rest of the day. We'll be in touch. Bye-bye. I don't even know how to get out of this.
Thank you so much.
Hold on. I think we're still in it.
I'll end the meeting here on my end.